What's up, guys? This is Crypto with James talking to you today about Kadena. Kadena is an outstanding blockchain, and ecosystem's a bit small, but obviously it's not actually been up and running that long. Hit really good heights in the previous bull cycle, so I want to look at what it could do feasibly in the next bull cycle, along with taking a look at some of the data around it, particularly the miner stats. That's always valuable information, along with some recent news about Nexo suing a government for not permitting them to be a digital asset provider. So I'll cover that as well, because Nexo for me is a concern and should be a concern for a number of people. Before I get into that though, if you are new to the channel, guys, these are the first 26 coins I spoke about on this channel. They're the first 26 coins I actually owned when I made the channel as well. Had you put in just $100, just $100 into each of these coins when I released the videos about them, and then you sat on them, you ignored them for, years, and never sold them, just did everything wrong as an investor. If you were still holding all these cryptos, the $100 into each would have netted you a profit, if you banked it, of 10.2k, which is not bad. But if you just sold these coins at the back end of 2022 like I did, 2021, sorry, like I did, and then $100 into each, as an example, could have netted you a profit of 123 grand. So obviously a grand into each would have netted you a profit of 1.2 million. Now, as I said, sold all these off. These are not the coins I own, but if you want to see the current portfolio that I hold, you can go to copymycrypto.com. That is where I share my portfolio. I give the members info on the coins that I hold, how much I think they can run up to, what percentage of my money I'm putting in. The members all get real-time updates anytime I buy or sell a coin. We release videos on a daily basis talking about the markets, and if I do say so myself, we've absolutely nailed it every day for the last few months, within like 0.1% of the moves. It's been crazy. And then on top of that, guys, we have tutorials set up for the members, because we've got a lot of people that never invested in crypto before, so these tutorials are step by step. And look, the site and the channel have obviously had a lot of big wins, none more so than Phantom. Phantom, I said, would 100x. It was actually, I did a course titled The Best Cryptocurrency Investment of 2020. Said Phantom would 100x. It did 677. I will find another Phantom, and when I do, I'm going to go onto my site. I'm not going to do a course. I'm going to go onto my site. I'm going to tell the members about the coin. I'm going to tell them the gains I think it can have and what percentage of my money I'm putting in. And if they want to, they can copy along for the next big gainer. If that interests you and you want to take the thought and all that research out of your crypto investing, go check the site. And remember, everything that you read there, you can verify yourself on the YouTube channel's history. Right, Kadena. Currently priced at $1.12. Market cap of 242 million, so pretty big. It's a proof of work blockchain that combines the proof of work consensus mechanism from Bitcoin with DAG network, or with DAG principles, to allow effectively a scalable version of Bitcoin. Now, Kadena has actually already scaled its network from 10 to 20 blockchains and can do so again in the future. This addition and this basically additional layer for Kadena can support up to 8,000 transactions per second across 500 nodes. And when you're running 10, 20 blockchains that can run those sort of numbers, you're going to get a lot of throughput. That bodes really, really well. Their ability to scale is enormous. And by effectively what they've got is a number of chains that are sort of they use the term braided together. It's very, very, very similar to effectively how parallel chains work. Although, as they use the terminology braided together, they're more intrinsic than are the parallel chains that, say, your Polkadot, your Kusama have up and running. The main limitation for Kadena right now is adoption. And that is something that they're trying to, and the main limitation for crypto really is adoption. That's something that Kadena are trying to solve by adding and as scaling and additional blockchains require the network to undergo a hard fork, this means Kadena can scale 50 or even 100 blockchains. And then remember, each one can have a throughput of like 8,000 transactions per second. So you're looking at a real good throughput there for Kadena. Now, big upside is Kadena's got a nice long token distribution. Then the mining is going to be done over effectively 100 years. 700 million will be emitted over 100 years. The platform share, there's going to be 200 million to be emitted over 9 years. You've got investors, strategic reserve and contributors who've got 90 million tokens, and 10 million were burned at launch. Now, because the tokens are distributed so widely, that bodes really, really well. I mean, the full supply won't be out until like 21, 21. Or anyone that's watching this will probably be dead by then. Nice cheery thought. But by the next bull cycle, right now, as you can see, we should be getting closer towards 400 million tokens by roughly 2025 or thereabouts. So we're going to start seeing Kadena being produced at a pretty significant scale over the next few years compared to what it is right now. Obviously, then the halvings and everything else, they have got a halving principle in place. Basically, half of the tokens that are remaining will be released over a 20-year period. And then, right now there's like 800 million, or whatever it is, 784 million. So half of that will be distributed over 20 years. Then you'll look at the remaining gap, and that remaining gap, half of that will be filled over the next 20 years, and then again and again and again. So what it does mean is, because there's a nice slow release, bar the sort of release that we're going to see over the next sort of 2-3 years, because that's going to be a bit bigger, Kadena can go on, is going to effectively go on forever, as long as it's utilized. Now, in terms of data, the net hash rate change is about a 70% increase over the year, really. And when we remember that sort of the Ethereum merge took place in September, we can see that there was that sort of nice steady increase prior to the merge, or basically, shortly after the merge, because prior to all of that, the hash rates that we were seeing were around 130 PHS, which is now, up to 204. So that's a pretty solid increase. So miners have obviously come to Kadena. Now, what's worth doing is comparing against all the other proof of work coins, because, I talked about Flux yesterday, and Flux, their mining hash rate is about 3 times higher than it was prior to the merge. So miners have flocked to Flux far more than they've flocked to Kadena, as an example. So miners aren't necessarily some miners are seeing that Kadena could be a gainer, but a lot of miners seem to prefer other cryptos that are in place. That's worth bearing in mind, because fundamentally, miners go where the money is. Miners have, a lot of miners have a very good success rate in terms of making money, because they go to the place that is profitable. So Kadena is improved, but not significantly compared to some of the cryptos out there. Now, in terms of the Kadena ecosystem, it's lacking quite a bit. They've got a DeFi setup with cryptos like TokenSoft in terms of payments. They've got Zoid Pay in terms of interoperability. They've got the wrapping for Kadena in terms of DEX. They've got KD Swap and DEX. And in terms of AMM, just Kadena Swap. So we're not actually seeing tons there in DeFi. nor really are we seeing a fat lot in terms of gaming. UFO gaming, that is it. NFTs, NFTs are looking a little better. Why has that just done that? That's just annoying. So NFTs, we've got data NFTs and Launchpad. And all we've got right now is immutable record. So lacking, to say the least. Oh, sorry, Marmalade, forgot about Marmalade. And DNA. So, the ecosystem's grown. It's not bad. They've got 51 projects attached, although I make the argument that I don't think it's reasonable to be putting in exchanges. I just don't think it's reasonable. Although that's custody exchange, not an exchange, not a normal one. But you can't. My personal perspective is I don't think it's reasonable to be putting in sort of your KuCoins or your Binance. I don't think putting exchanges in is reasonable. I don't think you can call that part of your ecosystem. That's just where your coins are traded. My personal perspective, anyway. I know some people like that. But yeah, so the ecosystem's all right. It's all right. 51 projects. They've been up and running since 2020. Really started getting up and running and properly kicking on in October of 2021. In terms of what Kadena, or the backers, of Kadena, just seeing if there's any recent news. Kadena CEO Stuart Popejoy on blockchain design. Proof of work is a feature, not a flaw. Yeah. Okay, fair enough. Oh yeah. So it's worth mentioning as well. The team behind Kadena have huge histories with sort of your JP Morgans, where they were leading the emerging blockchain group before founding Kadena. Got good, strong relationship, I imagine, with JP Morgan. So they're going to have some inside track on on working with any banks that start integrating crypto. It's only really backed by, you've got coin fund portfolio, multi-coin capital portfolio, and what was the other one? Amino Capital, and there are a couple of others that raise capital for Kadena, but not necessarily the biggest compared to some of the crypto projects out there. One thing that I'm always keen to see, and I'm glad to see it for Kadena, is that they've got a grants system in place, which is $100 million grants program for Web3 builders. This is so that they can do a big push in the overall ecosystem of Kadena. And as you can see, there are some grantees that have already won, DNA, Calend, Eucalyptus Labs, Crank, Hypercent, etc., etc. So they've got their grantees. The grantees are obviously winners of the grants. So it's good to see that they're starting to build. Now, for Kadena, the biggest thing for me here is, or the biggest, I suppose, negative really for me is that there wasn't a bigger minor surge going to Kadena. I would have thought we would have seen that based on sort of the potential here. Because bringing such levels of scalability to a proof of work is a real big win, because proof of work is so damn secure. And that's not to say proof of stake isn't, it's just not quite as secure as a proof of work. So, utilizing, effectively integrating a DAG infrastructure on top of a sort of, on top of a proof of work chain is outstanding. It means, those DAG features are going to allow for the speed of the network and effectively, for lack of a better term, sharding of multiple different blockchains. that can be integrated. So I'm liking Kadena. I got to say the chart does sort of scream bull cycle pump. So I'm not necessarily sure that we're going to see it break previous highs in the next bull cycle. The way I believe that would happen is fundamentally down to some serious growth and some serious integration with some of the top tier projects. That needs to happen for them to sort of hit those heights that they're aiming to. Because I can't see this being, $100 coin. I can't see this being even a $50 coin, really, because I don't think they're big enough yet. I just don't think they're there. They're in terms of the ecosystem. Probably can run back to $20. That would put it a market cap of $4 billion. If we're looking at 300 million supply by the next bull cycle, which is about right based on the sort of rough chart that's presented, then 6 billion market cap. That's still reasonable that could be hit. But I don't think a new all-time high is on the cards. Purely off of the basis that, again, it looks so similar to, the chart looks so similar to some of the charts we saw in 2018 and those coins that never really did their run again. And also, right now, their ecosystem is too small. You can't tout about 51 projects when a number of them are just the exchanges that you're listed on. So they do need to grow. And if they grow, definite potential, but I'm limiting my sort of expectation to only about $20 just off of that basis, because they've got a lot of work to do in terms of growth. Now, always worth doing is screen grabbing a few pieces of data. Particularly if you're tracking any crypto, so say Kadena's an example of one you're tracking. Screen grab. Wait, you don't have to screen grab miner stats, but track the miner stats. Just see if that is changing at any point. Because obviously, if you start noticing the hash rates increasing month on month, that means miners are leaving wherever they were to flock towards Kadena. That's a really good sign. Number two, keep an eye on the projects that are currently working with Kadena. So screenshot month on month, or just make a spreadsheet. I like spreadsheets. Make a spreadsheet, logging them, and noting how each respective sort of project is doing. Because if it's a crypto that actually has a crypto as opposed to like a wallet or an exchange, has that crypto died a death, or is that crypto doing all right? Is it doing good volume? Because at the moment, Kadena's doing crap volume, really. 6 million is not great volume for $250 million market cap. But I still think it can probably run back to $20, but not if it stays the way it is. I'd still need to see some growth. But if they can double their ecosystem size, then they could certainly create a new all-time high. But the chart doesn't look great, personally, from my perspective. Certainly not on a long-term trend. But let me know what you guys think in the comments down below. And if you're a returning viewer, hit the subscribe button. These videos will help you out and make you money, so don't miss them. Before I get into the Nexo stuff, because I really do want to cover the Nexo stuff because there's concerns there. If you guys want to see the coins that I own, go to copymycrypto.com. It's where I share everything I own, every coin I own. I give the members real-time updates anytime I buy or sell a coin. Videos are released on a daily basis talking about the markets. We have tutorials set up for people that are beginners. And guys, we have a history of success where we've had big wins, whether that's, a Ponyo or which did like a 200, 300x in like a couple of weeks. We had a Phantom that was my pick for the biggest winner for the previous bull cycle. And I said it was going to be the best investment of 2020. Did a 677x from when I found it. So had you put in $2,000, you'd have netted 1.3 million. So when I find the next Phantom, instead of doing a course like I did last time, I'm just going to go onto my site. I'm going to tell my members what gains I think it can have, my reasoning behind it, and what percentage of my money I'm putting in. And they can copy along, make the same gains. And if that interests you and you're looking to take the work out of your crypto investing, go read the site, and remember that anything you read, you can double check yourself, you can verify yourself on the YouTube channel's history, guys. Now, last thing, because I really do want to talk about Nexo. So Nexo has sued the Cayman Islands regulator for VASP registration. So that's virtual asset service provider. Now, the Cayman Islands Monetary Authority rejected Nexo's application. The regulator cited insufficient documentation on customer risk assessment and enterprise risk assessment, plus deficiencies in anti-money laundering procedures as several of the reasons. However, Nexo has argued in court that the grounds of the application were not satisfactory. And that the reasons given were not satisfactory or not detailed enough. A spokesperson for Nexo said the lawsuit is a natural reflection of Nexo's ongoing license acquisition mission around the world, and something quite normal that occasionally happens throughout the process of getting authorized. Now, they've obviously been scrutinized as of late. I spoke about their investigation, the investigation that happened by the Bulgarian authorities in suspicion of money laundering and tax offences as well, which obviously Nexo have denied. Now, look, Nexo, if you're unfamiliar, it's an interest account. You know, like, I know they have more than just their earn mechanism. You know, they have an exchange. They have a lot going for it. They legitimately do. They've got, you know, an exchange. They've got the Nexo card. They've got Nexo Pro. It's got aggregated liquidity. They've got the Nexo Booster, where you can borrow to buy up to 3 times more crypto. You know, they've got a lot of features, but their earn interest thing is a real problem. And it has to, anyone that's with Nexo needs to be aware of this. Look, this is USD coin. They're saying, that's what you should get after 12 months. So they're saying 10% interest per year. We have seen problems with high interest before. That's what caused problems for Voyager and Celsius, along with, obviously, the unscrupulous behavior. But the only way that Celsius and Voyager could offer such interest rates was by utilizing customer funds to leverage to make profit. So they had to trade customer funds to make the profit to offer the yield, and then they took their cut of the profit. This is probably, I'm not saying unequivocally, but this is probably the situation that is also occurring here. You know, DAI is offering 10%. 10% after 12 months. 10% APR, or APY rather. APY, 10%. It's very, very high, and I am legitimately, and it's all the stable coins. All the stable coins are offering 10%. That is a big ass yield to be offering. And the reason that I'm flagging this is, firstly, I don't want anyone to get, you know, done by in the same way that people got done with Celsius and Voyager. But bear in mind what's happening at the moment. You know, the SEC have gone after Gemini for their interest products, their earn features. Nexo, that's what they have. They have an earn feature. They have this high yield feature, and is well within the realms of possibility that we're going to see the SEC or some regulator come after Nexo, because legally, for whatever reason, the SEC are very, very, very against offering those forms of yield. Now, I suppose the question is where is Nexo's base? Because they may not require, they may not have to worry about sort of the SEC's jurisdiction. But I don't know. For me, this is high risk, like really high risk, leaving any funds in something like this. And I know they have an insurance protocol in place, but I don't know. I just think it's again. I've said this before. Don't leave your funds on exchanges. Don't leave them in high interest accounts. They could all go bust. Everything can go bust, and anything that's offering these percent yields concerns me. Particularly when there's so many stable. Although they're all saying up to 8%. But for all stable coins, whether it's a euro, a pound, True USD, USDC, Pax dollar, all these stable coins, a dollar, like are 8%. That's a big yield. And the only way they can generate that is by utilizing customer funds to trade. It's just true. I'd really, really, really recommend people check through how they can offer it. So they've said how does they keep their customer things safe, military grade, and they have insurance. They've got insurance from Lloyd's of London. Now Lloyd's of London's insanely reputable, but I just be cautious here, guys, because I do think people are putting themselves at risk with a platform like this. And that is it from me. Hope you're all keeping well. Take it easy. Bye-bye.